in which liquidity is coming in. FPI buying has picked up, which is why we're seeing banks finally turn green as well. What do you make of the overall structure and the construct of the market post-elections now?
Yeah, so roller coaster ride post-elections, election verdict on the exit polls and then the actual verdict. So the pendulum has swung from greed to fear to greed to now FOMO is what I reckon. A lot of buying happening post-election results. We've seen the SIP flows. So I think it's a fear of missing out, playing out in the market. Those who wanted to buy are getting into the market. Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. There's nothing to really call out that, things are getting excessive on the overall market as a whole. But yeah, I mean, the thing to watch out for would clearly be the budget and if there are negative surprises.
Okay, Manish, I'll come back to our markets, but I wanted your thoughts on what's happening with NVIDIA and, all the big tech stocks globally, right? I mean, all Indian investors are wondering how they can participate in the rally there, not just with NVIDIA, which of course has played out. There are so many other companies, whether it's, some of the big tech companies, where it's something like an Applied Materials, which is, of course, in the semiconductor space, that's rising as well. Now, for an Indian investor who's looking to put money to work, there are many mutual funds that have exposure to these global names. Do you think that's the best way to approach it, or do you think that story has played out already in big tech?
I think the only way Indians can get exposure to overseas market is through LRS or through mutual funds where they're already invested, because I believe limits are almost full for overseas investments in most of the mutual funds. So that's the only way to invest and in overseas through the LRS, through individual, names, individual files where you could invest $250,000 per person. That is the only way out. As far as the overall IT space is concerned, I read that there's a lot of divergence. Few of the large caps are the areas where there's a lot of buying or bullishness, but the rest of the market is actually falling behind in terms of the NASDAQ construct as we read. Not too much of an idea about what is happening out there, but yeah, clearly, NVIDIA is off the charts. It's clearly flying away to glory, so to speak. So, and of course, that's going to have a repercussion, globally as well in terms of tie-ups that this company has all over the globe, including India. So, overall, I would say that in terms of the IT space, we would reckon that, the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India.
Hi Manish, good morning and good to see you. And when NVIDIA, what it used to make it in an entire year, now in a single quarter, it's making twice of that. That's the kind of financials as well that have been coming up, and the stock has moved just one way. I wanted to ask you, Manish, about the telecom space. That's suddenly come back. For those that applied in the rights issue, they're quite happy with regard to Vodafone Idea. But how do you approach this theme? We have a tariff hike that's in the works, and all probability the next couple of months we should hear about that. So that's a tailwind for the entire sector. But how do you play it?
Yeah, so tariff hike, is getting priced in for the all the three names that you have, the leading ones. And obviously a lot more has to happen in terms of, getting Vodafone Idea to justify the fundamentals. A lot of legal cases where the dues are there should either be having some sort of a moratorium going into future number of years or some sort of a waiver. A lot of positive announcements or judgments that should come in their favor to justify 10 times EV to EBITDA 2 years out. Because, and plus now they're actually, converting a lot of their operational creditors dues into equity. So I think, tariff hikes clearly is the need of the hour. We have had it too good for too long. It's around the corner, and all the three players must, act in sync. That's going to be the one monitorable, and then it is about the dues that need to be paid. Clearly, the third player will have to have a lot of positive announcements in this regard to justify fundamental valuations. But mind you, telecom is some sort of a utility sector. We can't really be having a 15 times EV to EBITDA 2 years out in terms of valuation. I don't think those sort of valuations do sustain. But anything like 10 times EV to EBITDA on a FY26 numbers, you'll have some reasonable upside even from these levels.
Okay. By the way, you're checking Zomato, stock's extremely active. Good volumes, 2.5% higher. Yesterday, Zomato also officially released to the exchanges that it is indeed in talks with Paytm for their entertainment business, the going out business, as Zomato calls it. And of course, the stock's now racing towards the 200 mark. Give us some ideas. I don't know, you won't talk stocks, Manish, but some thoughts. We were speaking to a defense analyst just a while back, and the grouse there was that valuations are so high. He likes a lot of businesses, but he has hold calls. He says, I can't issue a buy call looking at the valuations. And on the other side, you have a lot of these, consumer-centric, newer age businesses that have actually turned around very well. We're seeing some of the jewelry stocks react quite well to some buy notes this morning as well. Just some thoughts on where one should be looking in this market beyond the obvious.
So one sector which, to my mind, will gather some attention is the housing space. Not yet fully priced in, but anything that goes into the housing part of thing, because, it is the roti, kapda and makan. The roti, kapda has been taken care of. The makan is now the focus of attention. The PMAY has announced 3 crore new houses. The sector has seen some sort of a consolidation in the second half of last year. And I think a lot needs to be done for the middle class, the lower middle class, and the rural folk. In that space, I think anything to do with housing, whether it be building materials, housing finance, home improvement, real estate in any case is firing through but I'm not talking about actual real estate, but housing, ghar. For the masses. That is one area which is not yet priced to perfection. And, there's a lot of upside, assuming that. And my sense is if this sort of programs are taken by the government, you have, some sort of leeway given in the taxation part of things, catering to housing even now, then you could see 20-25% sort of a growth. And in that regard, he's still trading at less than 1 PEG, most of the decent names, so to speak. So this is one area which I think has not yet seen the attention of the market. And of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Okay, well, there's a sudden slide in the mid-cap index, by the way, almost 500 points gone in the last 10 minutes or so. It's a 1% knockdown in the mid-cap index. So I don't know what's led to that, but there is definitely some volatility that's kicking in. The advanced decline ratio as well has just turned in favor of the declines, almost 1430 stocks over there. And if you're looking at the mid-cap end of trade, then there are plenty of stocks, that are seeing a bit of a crack. Some of these vulnerable names, but even defense names, BEL is down about 3% right now. BHEL is down about 2%. IRB Infra is down. IEX, NBCC, IRFC. So all your big gainers are now coming in for some profit taking. Manish, before we let you go, this rally has largely been led by large caps, but there's been participation from the broader end as well. Now, are you getting a bit uncomfortable about the broader market up moves, the valuation discomfort? And do you think the more prudent idea would be to stick to large caps over mid caps?
No, so on the contrary, I think the large cap, the Nifty 50, would have very full valuation once we approach closer to 25,000 levels on the Nifty. And that is just about a 5 to 7% up move from these levels. Having said that, certain sectors within the Nifty 50, which would see, and assuming that we are seeing FY25 clocking 15% earnings growth, which would be driven by BFSI, oil and gas, metals, and IT. These are the spaces where you will have cushion. Capital goods are priced to perfection. There is a lot of growth, but it's all priced in. They would see some sort of consolidation. Same goes with defense, cable companies, power equipment companies. I mean, all of that, it will see growth in terms of numbers, but these valuations are prohibitive. On the contrary, the broader markets, which is basically the mid-cap space, I'm not talking about the small-cap space or the micro-cap space, but the mid-cap space, there's a lot to pick and choose within sectors. And it's not about the index per se. Certain pockets of the mid-cap index also are priced to perfection or even excessive, but there are a lot of opportunities within the broader markets in terms of sectors and picks. So this is one space which will remain, in terms of your stock picking, a lucrative area to look at. But that's how I would put it. I don't think it is large caps over mid caps. It is going to be mid caps over large caps, at least from the next 6 months point of view. And of course, you'll have the budget to reckon in between, and then we'll take it up from there, how the things look like 1 month from.
Okay. All right.